Hi, this is Cary with Wicked Stocks, bringing you another stock video analysis. This a brief update, really, on the SPDR SP-500 ETF, symbol SPY, commonly known as the SPY. I did record this video on Monday, July 26, 2021. I'll be giving you some levels from a weekly chart. Wicked Stocks offers two forms of membership, free and premium. Free membership is exactly as it sounds. For no cost or obligation, you will receive one free stock video analysis a week, typically released on Mondays. And if you provide your name and email address, you'll receive an email from us each and every time a new free weekly video is ready for viewing. The second form of membership is premium and provides at least two stock videos every week and costs $24.95 a month. Just click on the premium membership link, fill out your payment information through our safe gateway portal, and you'll receive an email each and every time a new premium video is ready for viewing. Cancellation is allowed at any time. This is sort of broad brushstroke from my point of view in terms of what we might expect in the weeks ahead. Last week, if I can zoom in a bit, you can see we had an outside week. We broke early in the week, came barreling back to close above the preceding week's high. That outside week is sort of a reversal to the upside, really, a sign of impending strength. But I'm sort of in the category of not so fast. You can see this sort of wedge, rough wedge pattern forming. I'm particularly focusing on the trend line going across the highs that this week is 445.64. And that trend line rises 1.85 a week. So, you can do the math if you like, through time, next week, the following week, into later August. That trend line for me is really sort of the breakout to the upside. Now, there's no question the S&P 500 or the SPDR ETF that represents it is in a consistent up pattern, a consistent bull pattern, week by week, with the occasional sell-off. But on a week by week, there's this pattern of 3 to 5 weeks up, then we give some back, and then we continue at it to the upside. And so, to call it a breakout above 445.65 is a bit of a misnomer, if you will. We're already in a bull market, but for me, closing above 445.64 at the end of this week or above that trend line in the weeks to come is a bullish event. And under that scenario, my first target within probably 2 to 3 weeks would be 461.14, a simple channel top that incorporates trade over the last 9 months or so. 461.14 rises 261 a week. That becomes a 2 to 3 week target. We could top out there on a monthly basis. But overall, quite honestly, if we close above 445.64, given the wedge patterns typically are bullish events longer term in this scenario, closing above that wedge, that trend line at 445.64, coupled with the fact that the market is already in a longer term bull trend, I really think that by the end of the year, over the next 3 to 5 months, the market can and probably will reach that 498.41 rising channel top, a steep channel top that includes trade over the last year and a half or so of activity following the March 2020 COVID low. So 498.41, a 3 to 5 month target. If we were to close this week, for instance, above that 445.64 trend line, that 498.41 channel top, able to contain at least quarterly, possibly annual buying pressures if or when tested. Now let's talk downside. Holding below this 445.64 trend line does allow the market to fall back over the next week or two to respectable midterm support. This week at 421.23, and that formation rises 159 a week, and you can do the simple math there as well. And bear in mind that this channel bottom remains valid, remains intact, so long as we hold below that 441.89 simple trend line off those recent highs. I just need to make that clear, because if we push above 441.89 this week, for instance, and we very well may, we're 440.56 last. If we push through 441.89, then that channel bottom at 421.23 needs to be reconstructed, just an FYI. But if we test 421.23 over the next week or two, and we may. It can contain selling into later August, and we can remain sort of in a congestive framework through August above 421.23, with the ceiling once again at that trend line at 445.64. But let me mention that if at the end of this week, for instance, we close below 421.23, that would be a sell signal into later August. The next several weeks then expected to test this more meaningful channel bottom presently at 394.70, which is also rising 185 a week. And so you can see that that channel bottom is based upon that trend line at 445.64 I showed in one of the opening slides. And so this kind of says it all for me. Really, this channel formation says it all. If we close above 445.64, then we have longer-term bullish continuation into later year. As I mentioned a moment ago, that 498.41 channel top becomes a 3 to 5 month target. And inversely, if we close the week below 421.23, then the channel bottom at 394.70 becomes the next 2 to 3 week objective, where we can bottom out on a quarterly basis, possibly through the rest of the year. And I think that really summarizes it. This should be good for the next few weeks out, this SPY update. I like doing SPY updates because, you know, and I think you would agree with this, if your portfolio is comprised of large cap stocks, some of which may be in the S&P 500, when the SPY is strong and pushing to new highs, your portfolio tends to do the same. And inversely, when the SPY is weak, so goes the portfolio. Anyway, that is all I've got for this particular Wicked Stocks video update on the SPY.